Happy Friday. Before we end the week, we take a look at Johor Tin. TA Research is keeping its buy recommendation on the stock. The research house's target price remains unchanged at RM2.10, a 30.4% upside from JTB closing price of RM1.61. JTB bounced back pretty quickly after being hit by the MCO. Core earnings may have been down in the first half, but it is worth noting the 61% quarter-on-quarter surge in the second quarter. TA Research says the group started registering new orders during the quarter. Also helping was the fact that JTB has little exposure to hotels, while its core channels, restaurants, coffee shops and home consumption recovered strongly. And with 1.5 months of dairy backlog orders to fulfill as it catches up on production, the company's second half earnings could beat TA's FY20 estimate of 40.7 million ringgit. That said, TA is staying conservative and keeping its current estimates given the operating environment remains fluid amid the ongoing pandemic. Elsewhere, JTB's Mexico JV was disrupted as its key engineers were barred from entry due to border restrictions. But with a little virtual commissioning, it got local engineers to set up the packaging lines under the guidance of the key engineers. Next up, dairy production equipment. JTB is expecting its first milk production in November this year and commercialization in the subsequent month or early 2021. This new Mexican JV plant is seen as a growth catalyst as JTB gets to enjoy a favorable duty structure in the region coupled with easy access to raw materials and logistics arrangements. All in all, TA Research likes the group for its robust future earnings growth underpinned by capacity expansion, steady dividends and undemanding valuations. Latest data from Bloomberg shows only two research firms covering the stock, that's TA and Public Invest, which also gave JTB a buy. The average target price is RM1.96, 35 cents more than the stock's last closing price of RM1.61.